Hello, everybody. Welcome to Trio VC Insights. This is our first live session for Trio VC Insights. My name is Didem Altap. I'm one of three general partners for Trio VC, together with my colleagues Chidam Toraman and Arzu Tekir. It is so exciting to be here because it's been quite a journey for us too. We started roughly August 2023, so almost a year ago. And we did our first capital calls in October. And we've already made 6 investments, and we're moving right along supporting Turkish tech companies in the US market. And today's topic is actually going to be why the US market is such a strategic global stage for Turkish technology companies, and why we believe that Turkish tech can actually compete in today's entrepreneurship environment. And of course, while we're doing all of this, we have one of the most experienced founders, entrepreneurs, successful founders, and active investors, Mr. Bulent Celebi. He's the founder of Airties, who's also a very active angel investor. And now he's a venture capital investor together with Trio VC. And what's really exciting about Bulent's story is his career in technology has spanned 3 continents, right? So he started in the United States working in the chip industry, among other things. He made it all the way to Asia, where he spent some time there. So he was literally, in the beating heart and pulse of the chip industry. And then he ended up in Turkey to mobilize Wi-Fi connectivity issues better than any other organization could do, given their mesh technology innovation. So not only is he actually a tech guru, but he's also an innovator. So he's actually developed technology as well. So there's hard tech involved in that activity. And what's interesting about working with Bulent through my years together with him at Endeavor Turkey, and now at Trio VC, is that he's one of the entrepreneurs who, even though he knew the United States market really well and he was very comfortable with it, he hesitated to go there. He experimented with the Middle East, with Europe first, and he took his time to go to the United States. And in retrospect, he wishes he had gone in earlier. And I've always enjoyed this conversation with him. So when we launched Trio VC, actually even before we launched it and we were doing our own feasibility study, Bulent was one of the first people that we went to for feedback and advice on our initiative and our investment mandate. And he thought it was a wonderful idea. So he was one of the first people to support and back us in these activities of helping Turkish tech really bridge the US market. So Bulent'cim, can you tell us a little bit about your career before we get into why the US market is so interesting and important for Turkish tech companies?
Well, first off, Didem, thank you for inviting me to this wonderful event. Very happy to be here. You covered a lot of the high points of my career. I moved from Turkey to the U.S. when I was basically a teenager with my family. Went to UC Berkeley and EE, and then worked in the chip industry there for quite some time. And then decided to found Airties. So I don't think no need to go any further into that. But the bigger thing I think is why the U.S. market. Before I even go into that, there are many Turkish startups with great ideas, with great technology. And then they essentially run into the wall of the size of the Turkish market. If you're not in fintech or a few of these segments where the local Turkish market is really big enough for you to become, multi-$100 million valuations, maybe even a unicorn, is very difficult to be satisfied with the Turkish market. So inevitably, even the Turkish VCs are now basically saying, if you don't have a globalization strategy, you're not on the list to become invested in. And so many of the Turkish companies, what they initially start out with is, of course, they just look around the region and say, okay, let's go to the Middle East and let's go here and let's go there. And they immediately focus in that area. And then you quickly find out that there are a whole bunch of issues with that. And then if they take one step further, they go to Europe, where there's another. It's obviously a much bigger market and much more attractive. And the U.S. usually ends up being last on the list, unfortunately. And I think many of these companies would do much better to really focus in on the U.S. market right at the beginning. And you might say why? The outside of, everybody knows the U.S. market is huge, but that's just one parameter. The real more important thing is the attitude of the customers. The customers are much more attractive in the sense that they're not reluctant to use new technology or new ideas. In fact, they want to use it. They pull you in. Now you have to have very good technology. You have to have a very, very strong value proposition. But those are all tangible metrics. It's not that you have to know XYZ to get an audience or to be able to do any business. It's not the more relationship type things. It is more the things that a startup founder can actually control. It's like, how good is my product? Am I really solving a real problem? And if you're doing those things, then you'll get an audience with the U.S. customers. They act very quickly. The possibility of winning business is much stronger. It's based on nice tangible things. Versus, like, even with Europe, they just take so long, and they come up with 50 reasons as to why. Well, we have to change our process. We have to get this approval. We have to do that. We have to do that, and you can't move quickly enough. So, I mean, the U.S. guys, they're open to startups. They're open to technology. Now, being a Turkish tech company, you start out at -1 because Turkey is not known for technology in the U.S. So the obvious question becomes, why am I going to go to Turkey for technology? But you can get over those types of things.
Bulent, let's deconstruct these things, because I think that there's a whole treasury of information in the summary that you just gave. And I do want to deconstruct it from 2 points of view. One is being able to position to attract clients or customers. And let's talk specifically in the B2B domain, because I think B2C is something completely different, very different, not completely different, but quite different. And also how to become investor ready in the United States and what different parameters that they're looking at. And one of the things that we've discussed plenty of times with you in the past has been from a point of view of attracting customers or positioning yourself to attract customers in the United States. The difference between networking and meritocracy. So we were saying, in Turkey or in Europe, the networking element weighs very, very heavily. And of course, that's true for everybody around the world, right? Networking is always an important element in your toolkit. But meritocracy plays a different role. So what happens when you're a foreigner in the United States and you're speaking English with an accent? And how do you really convince the customer or gain their trust?
Very good question. And it's usually, first off, you obviously need to be able to communicate with them. So your English has to be good, but it's okay to have an accent because they're just totally used to that. There are a whole bunch of Indians and Chinese and Turks and Arabs, and so they're all there. Yeah. Latin Americans. So they're used to dealing with, in particular in technology, they're used to dealing with people that have an accent, but you obviously need to know English relatively well and to be able to communicate. So that doesn't bother them I wouldn't say at all, because they're very, very used to having high-tech companies be led by non-white American people. So that is not an issue. By far, the biggest issue is, do you have a technical, tangible product differentiation? What your value proposition? How good is your value proposition? And it has to be good enough for them to be able to make a change. because they're not going to just go make a change because they're definitely not going to do it because of the color of your eyes or something along those lines. You have to have something very tangible to offer them. Now, ultimately, they're going to want the customer service, and they're going to want the technical support, and they're going to want somebody who they can call on immediately if if there's a problem. But that's true of any business. And so you have to provide, you ultimately have to be able to provide all those things. And if you're providing those things, then they're open and they go for it.
Again, from the client perspective, one of the things that we've noticed as Trio VC in the United States is the tendency for American companies to be open to doing paid pilots, which is very different from Turkey and maybe even Europe, right? So they're open to this idea of innovation. And I also think it's a timing issue too, right? So they're open to paid pilots, but it's also kind of an even playing field right now with the advent of generative AI, and kind of everybody can compete right now. There's no like clear gold standard. So the Turkish tech companies can also compete. What would you say about these paid pilots and the opportunity to co-develop products and services and solutions with clients in the United States?
I mean, it's one of the big things that I think that again makes the U.S. customers more attractive. Again, in particular for B2B situations where you may be lacking a few features or a few things that the customer wants, and they know that you're a startup and you don't have a whole bunch of resources and things like that, and so they don't really squeeze you're squeezing down to the lowest price and lowest cost and these types of things. In fact, they go the exact opposite. What they try to do is to say, I like the idea you have, but it's really missing this and this and this. Can you do that for me? And oh, by the way, I'll help cover your costs. So we definitely had plenty of what we called non-recurring engineering fees, where we charge the customer upfront costs, engineering costs, and they paid for it, and then ultimately bought the product in full production and in full volume later, but they help subsidize the thing. And again, this is a big contrast. I don't know how much this is true of the Western European countries, but it's definitely true of the Turkish companies. The Turkish companies go the exact opposite and say, "Oh, you're a Turkish company, so your price should be much lower. Why do you should do this for free? You should do it for the name we're going to give it,
prestige, sure,
for the prestige." And the mindset is just totally different, and it's so wonderful. You go there, you meet with the appropriate people. Of course you have to do some negotiation. They're not going to just throw things at you, but you go through that once, and then they decide they commit to you, and then after that it's relatively smooth sailing. You have to deliver.
Yeah. I love case studies and storytelling. And I remember you talking about how one of your clients in the United States, like the fact that you guys were co-creating, actually led to one of your biggest pivots as Airties, like the feedback that they gave you guys. Can you tell us a little bit about that? And how important was it that you were there in the United States in front of the client and not a mid-level manager, maybe?
Very, very, very good point. So when we first started, we basically were coming up with this thing called mesh network, which actually solved the coverage problem inside the home. The Wi-Fi coverage problem inside the home. And we're at one of our major customers, and we got all the technical people. They looked at the stuff, they liked it, and they were going to submit it to their top management. To get it approved and to get a go ahead to move forward, and then this situation became, it's really difficult to explain what a mesh network is and how do we how are we going to present to the management, this is what's going on, and they challenged us to come up with a way of showing it to their management,
Visualizing it, right? Yeah, sure.
visualizing it, yes. And so we had one of our, I was there. We had one of our chief R&D people there, and then we got a hold of one of our senior engineers in Turkey, and literally within 24 hours, we came up with an iPad app that showed the whole network and how it was operating. And how the different devices were connecting up to each other and things like that, just as a visualization, so that we can actually, the guy can actually demonstrate the technology to his management. And lo and behold, during the presentation, what ended up happening is the top management got more excited about the app than they did of the mesh,
Technology.
core technology. And the reason was, they had a big problem in that they had no idea of what's actually going on in consumers' home network. And
it was especially at a time when video streaming and on demand was up on the rise, right?
Just starting, right? I mean, the iPhone is just started. Netflix is just going, and their technical support people are constantly getting under all this pressure, but they have no idea what the home network is looking like or how it's operating. And this app that we did for demo, they basically said, we want that.
Fascinating. Yeah.
And literally, we ended up going back and developing that product, and that essentially was the initial sense of how we developed the cloud stuff and all the monitoring and the data collection and all this other stuff. That was the foundation. Now, if I was not there, I could not, you could not see exactly how important of a thing that was to that customer or to the top management of the customer, and what a role it could actually play, and the whole ability to be able to quickly make a decision. If it was a sales guy that came back to the Airties top management and said, oh, the customer wants one of these, he would get shot down. And they'd say, oh no, we don't have the time, we don't have this, we don't have that. And so it's really important that, especially during the initial entry of these markets, and that a founder, co-founder, whatever, somebody, one of the core team actually is the one that is actually there to actually interpret what's really going on and to be able to put the support in place to when you come back to actually do it.
Well, kudos to you too for being an amazing listener, right? Like at that moment, you could have been all ego-driven and gung-ho about your existing product, and not being able to listen. It would have been kind of the kiss of death, actually. But at that moment, it actually ended up catapulting you guys into a whole new arena, and you were able to conquer the market. You guys were able to perform really, really well. And of course, you showed your nimbleness with Turkish tech team behind you. So you were able to do that as well, which is fascinating. But for Trio VC2, so, as we've spoken before, one of our core prerequisites is that if the founder is in the early stage, and we're doing pre-seed and seed investments, so we're investing quite early, that one of the founders, or at least one of the influential decision makers, needs to be in the United States so that they have a customer facing an open dialogue with the customers for feedback. Which actually brings me back to the parallel of this, right? So on the one hand, the customer is obviously the most important source of income, and actually the most important source of input for developing a product and services that's not just nice to have, but important to have. And on the other hand, you need that traction to be able to attract the interest of investors.
Yes.
One of the reasons why Trio VC was established was also to help deal with the bottleneck of the next round of funding. So fortunately, in the Turkish ecosystem, we have developed an early stage funding mechanism, but we are experiencing bottlenecks with round Series A, Series B, etc. And a lot of that probably has to do with what you mentioned very, very early in the beginning when you said Turkey is a great market to start, but you have to be able to expand. Or, it becomes a pilot market, proof of concept market, but then it gets saturated very quickly because the client base doesn't have anywhere to grow. So in Trio VC, we're saying get some traction in the United States and let's be able to position you for follow-on funding where you're pursuing Series A, Series B investments from US capital. And that doesn't mean you have to stop your R&D activities in Turkey. It just means you need to build your business development team in the United States. So when we were talking about that the other day, you mentioned something about the difference between Europe and how they're looking at business plans and projections versus America and how they're looking at metrics. Yes. Can we do a deep dive into that a little bit? Like, what's the difference between venture capital, between the US and other global markets? Like, how do expectations differ?
They differ substantially. And, I'm making generalizations. There are always exceptions. It is very traditional for the financial investors, for the even the venture capital companies to really look at, what is your financial projection? How much revenue are you going to generate? What is your gross margin? How much money? When are you going to turn cash flow positive? And really drill down into a lot of detail of what that, how that's put together.
So those are hygienics, right? Those are your projection, hygienics.
Exactly. Obviously you need a plan of some sort, mm-hmm. But especially when you're an early stage startup, those projections are just made up of a ton of assumptions. You have the spreadsheet and there's a line item there and you put a number in there and it's really not based on any actual factual thing that actually happened. It is a projection in your mind about what you think is going to happen. And ultimately, the assumption is not going to happen. There's going to be something wrong on one of the assumptions. And then your whole projection goes out of the water. It's just not worth anything anymore. And everything changes. So, then you can actually get into, you budgeted this and you didn't deliver that. And you can get into this whole negative cycle versus what the US type VCs are really looking at are the actual, metrics associated with what have you done? How many new customers did you win? What is the churn rate of those customers? How long do they stay with you? Do they stick with you for 2 months or 12 months? And then from there, you can calculate what the lifetime value of that customer is. And then from there, you can actually track the cost of customer acquisition. Mm-hmm. How much money did you spend to win this one customer? And those are all factual. They're based on what actually happened. And from there, you can make some educated guesses. They're still educated. They're still guesses, but at least they're based on some foundation that, this guy's cost of customer acquisition is high, but if he does A and B, we can get that down by 50%. Okay.
Well, it creates you can see then the opportunity for improvement very clearly. Yeah.
Exactly. So then you start coming together and saying, okay, well, this is what this company needs to do. They need to get their customer acquisition costs from A to B. They need to gain a whole bunch more new customers because once they gain them, they keep them, and it's really impacting the bottom line. The manufacturer or the gross margins are a bit low, but with a little bit of scale, you can draw the scale from here to there. They become very logical stuff, and that's what I really appreciate about the US type VC. They're looking at the potential of your market. They're looking at whether or not you have a proper team that is actually going to be able to execute these ideas and actually deliver on these things. and they're looking at those types of probabilities instead of looking at a financial spreadsheet and a business plan. And to me, that's what really sets them apart. And they're investing to help you, to drive the growth. They want the growth.
Yeah.
Because their whole mindset is growth.
Growth. Well, it's the growth mindset. And that's exactly how I was just going to summarize everything that you said. Like if you add A and B together, let's look at Europe. And I love Europe, mind you, but I'm just going to, one of the challenges we've had is, with the venture capital ecosystem in general is how do you beef up venture capital in Europe? And it really boils down to some of these like fixed mindset, a little bit more price sensitivity. So, and the fixed mindset is, where's the product today? And, can I get a lower price? And, what's my cost of transitioning versus in the United States, it's, what's the opportunity? How can I improve this product? Working together, co-creating, and then the growth mindset. And then it also sounds like, if I were just going to summarize it, one sounds like in Europe, we're looking at a top-down approach. So it's looking at a budget saying, I'm going to get 10% of the customers, which gives me the heebie-jeebies, versus really in the United States, it's a bottom-up approach. What's my first customer, my second customer? When I get to my 10th customer, what economies of scale am I going to achieve, et cetera? So it's really building from the bottom up, which is really interesting.
And how am I going to create word of mouth? How am I going to get that customer to be a reference for some other customers, and et cetera? So, yes.
Yeah, and so beyond the pilot projects, we also do see a lot of strategic alliances in the United States as well. So somebody who's a happy customer is actually happy to refer you to another potential customer, which is really fascinating. They're willing to endorse you that way. So that's on the customer side and on the investor side. You see a lot of that happening. And this goes back to how you're managing performance issues and relationships. But which brings me to, if you're doing research and development and a majority of your product development in Turkey, but your market is in the United States, how do you, again, address your customers' concerns in terms of being able to deliver? So what's the expectation management there? And I think that you guys were not just in Turkey, but you also have product development activities in Europe as well.
Yes. I mean, after the initial customer wins in the US, we built up a significant, initially as a technical support operation, and then expanded into an R&D operation in Austin, Texas.
Mm-hmm.
And there's also a significant operation in Belgium. So there are multiple locations. Now, the whole issue of having a bunch of R&D people in Turkey, that doesn't bother anybody. It's in fact it's expected, because many of the big tech firms have multiple R&D centers throughout the world. I mean, it's not only a cost issue; it's also a talent issue.
Right.
So different types of talent are more pronounced in India versus China versus Turkey versus
Eastern Europe. Yeah, sure.
So wherever you can get the right set of talent, and make a difference and be able to attract the people, that's what you have to do. And pretty much all of the U.S. companies, the customers, are accustomed to having remote design centers throughout the world, wherever it is. And if you picked Turkey, that's perfectly fine. There's nothing wrong with that.
So they're more than willing to accept it. It's not a barrier that you have to overcome. You just have to create your case for support and move on, right? This is the talent. This is the talent pool. This is how they're qualified. Let's go on to the next topic. It's just solving their problem, which brings me to product market fit and the go-to-market strategy. So United States is huge. A lot of technology can serve a lot of different customers. How do you digest the United States market or eat it? How do you eat an elephant, right? what is the product market fit strategy or the go-to-market strategy? What are the nuances or critical success factors of that in the United States?
First off, let me say that product market fit is one of the most complicated problems, and there is no formula for it. I've recently read a couple of frameworks and things like that, which are I find very very exciting, but there's no formula for it, and it's very, very difficult to attain. And by far, the single biggest reason startups fail is the market side, is the market validation side, and then so associated with the market validation side is whether or not you have a product that is actually solving the verified market. So the thing that I can say is start very, very small, start very narrow, with a very small, well-defined set of customers that you are going to target, because you can if you solve their problems and they get to the point where they would be very not sad, but I mean, it would be problematic for them to not have your product or not have your solution. Then you're starting to get to a point where you know that you are actually solving some critical problem for those people, because they can always go to your competitor or some other solution, but they really, really want that. Then you're making some progress, and it has to be perfectly clear. They need to fully understand it, and once you've developed that, then you can expand into side areas, with some tweaks into either the customer profile or some tweaks to the product itself, and you can expand more and more. And 9 times out of 10, even if you really narrowly define a market, it's usually much bigger than what you think it is. And to get a good valuation, if you've got $10 million worth of annual revenue, recurring revenue as a software SaaS, you've got a damn good valuation. And if you can bring that up to 20, 30, 50, all of a sudden you're starting to get into unicorn territory. So you don't need a lot, but whatever you do have, it needs to be very, very strong, and the customers need to be pulling you in.
Can you imagine if you just deciphered it, right? So if you had to get to 10 million and you had an average customer value of 500K, you need 20 customers. Exactly. All of a sudden, your bottom-up approach makes a lot of sense, right?
Exactly.
And if you're delivering really well to them, and that goes to part of the go-to-market strategy is doing that research and being able to reach those customers, which again, Trio VC and organizations like ours are there to help. But also that goes to brand building, right? That's, the brand building, the reputation building, all that kind of stuff is a byproduct of those solid customer client accounts.
And I mean, now as an angel investor, I get to see more and more of the startups, and I would say by far the biggest problem I see is the lack of focus. And they're trying to do this for this segment and that for that segment and this for something else. They're just spread out too thin. By far the biggest, most valuable asset in a company, in a startup, is the co-founder team's time. Where are they spending their time? What problems are they really trying to solve? And if you spread that out too thin, you don't succeed.
Very well. You just nailed it right there. So we are moving into the Q&A portion of our webinar today. And we have a question from John Yildiz, who says, as a hardware-enabled software startup seeking pre-seed funding, we often hear we don't invest in hardware startups. How can hardware startups address these concerns with investors? Which is a great question, by the way, John. Yes. I appreciate the pain.
Yes. and I've lived it many times. So let me put it this way. So with hardware or really raw technology, it is over the last 20 years, it has shifted more and more to either going inside of a chip, or it has shifted out to the software that is built around it. And usually it is very rare that a piece of hardware or a hardware design by itself has enough intellectual property to be able to be protected. Where some Chinese operation can't come and duplicate it and really put you out of business or ruin your business. So the real thing that you need to do is, it's okay to be hardware enabled, but your main proposition needs to be a cloud-based service, a piece of software. It needs to be something else. The customer needs to be buying something else. And by the way, I am an investor in several of those companies. One of the recent ones is a company called ERG that does hand washing stuff, and there's a piece of hardware. There is, but the value is not in the piece of hardware. The value is in the software and the services that go around it. That makes the product useful and attractive. So it's okay to have hardware, but don't have the hardware be the main value proposition. It has to be, the main proposition has to be built around a set of, it could be data, it could be AI, it could be some cloud-based services that are built around it.
Even in the example that we did with the case study of Airties. So for example, you were selling wireless modems essentially with this mesh technology. So that was the hardware piece of it.
Yes.
And it was the design, beautiful and all that kind of stuff. But at the end of the day, what hooked the people was the diagnostic tool that you created for the performance of the Wi-Fi network. And then the hardware was sold alongside of it, right? So chicken and egg question maybe.
Yeah, the hardware was required. Okay, you had to have some hardware to do it. And oh, by the way, we had invented the mesh network and got a whole bunch of US patents around it and all this other stuff. And over time, that piece of the technology commoditized. There were a bunch of standards that came out. There became some open source type stuff. And so, you can't really charge a lot of money for that. But how you manage that mesh network and all the information and the customer stuff is a totally different
the user experience, the user interface, all that kind of stuff. Exactly. So we have another question from Murat Bulat, who's saying getting into US PE funds or LPs has been difficult for Turkish entrepreneurs. Do you think LPs consider that Turkish companies are not as attractive as relative to the US or other country rivals? Interesting question.
Yeah. Yes, you're correct. So now the answer, the question is, why do they feel that way? And that's the main issue. Now, historically, there has been a lack of confidence in both the Turkish legal system and the Turkish economy as to whether or not these companies were going to be able to, if they invest, what type of risks are they taking, etc. And now this is going to sound a little bit anti-Turkish or whatever, but what many of the companies have done is they have either relocated their legal entity to someplace outside of Turkey, but still maintaining a very large presence in Turkey. And if you do that, then the USPs, they come for it. There's no doubt about that.
It's
I mean,
interesting. Yeah.
but I
One,
mean, it impacts both your valuation
mhm.
and the number of people that are willing to deal with it.
True, true. One of the things that we're trying to do as Trio VC, all of us, myself, Chidem and Arzu, take it, Chidem, Toraman, and Arzu, take it, all of us come from ecosystem building backgrounds. And one of the things that we're trying to do is to expand the Turkish entrepreneurship ecosystem into the United States. So we're actually, in addition to being a proper venture capital fund, we're also trying to kind of elevate and do advocacy to promote the Turkish tech talent pool and the capabilities of that talent pool. And of course, also the Turkish market has really interesting incentives that are quite competitive. So from the techno parks, et cetera, that translates into a competitive edge or a sustainable competitive edge over time. But you're absolutely right. Again, one of our prerequisites too is the company, one of the founders needs to be in the United States market for us to invest, and they need to have a proper entity established in the United States to overcome, some of those biases and really just take the air out of the sails, right? So it's not an issue anymore. It becomes a non-issue when you're in the United States and the company's American. Exactly. Enis Erdem, Yurda Tapan. I'm wondering about the next elections, which will be held in November. How many elections affect startup and investment ecosystem of the USA and the whole world indirectly? If you talk, I'll be happy. Great question.
Yeah, great question. Boy, I absolutely have nothing positive to say about Trump, and so now you're getting me into a political discussion. And
yeah, let's skip that part of it. Yeah,
I mean, of course, it's going to impact. I mean, the U.S. has a very real possibility of losing some of its shine and some of its attractiveness if things go a particular way. But I mean, it's such a big, powerful thing. I don't think I don't think it'll materially impact the startup ecosystem. People will work around it, and
they always do. Yeah, water always finds a way is the Turkish expression. Yeah. Su yolunu bulur diyeceğim şimdi ben.
Aynen. I mean, the ingrained culture. I mean, in a place like Silicon Valley, it is so difficult to duplicate anywhere else in the world. Even though with Endeavor, with this, that, we keep on saying, the U.S. doesn't have a control over innovation, and they don't. But the basic culture is so flexible and so supportive. I mean, you can be from any country in the world. You can believe in multiple gods. You can believe in, you can be totally different culturally and be happy living in the Bay Area. You can be gay, you can be this, you can be that, and you can still happily there. And the only thing that people are going to look at is how well did you do your job?
Meritocracy. I mean, I'm going to put democracy aside because that's a different topic, but meritocracy is, I think, the golden gem of the United States culture.
Exactly.
So Aaron Wimberly, does the recent shift away from our prior notions of globalization of business also perhaps represent some nearshoring or localization of supply chains closer to the end consumer? Probably.
My personal opinion is there's going to be a lot more nearshoring.
Yes, I agree.
And for many, many reasons. And it's not just, it's not just politics and grandstanding and all this other stuff. I mean, just think of the carbon footprint.
I was just going to say the same thing. Just that alone, sure.
Just that alone, So I think supply chains need to get closer and closer to where the ultimate demand is. Mm-hmm. And that's the only way we're going to solve some of these, carbon, global warming, carbon footprints. I mean, all these different things. I think it's inevitable, and it's going to get more and more localized. By the way, I just did an investment in a startup in uh, in Italy, which is applying AI to optimize manufacturing chains, factories themselves, and it's doing really, really well. So I'm a big believer in that there's going to be a lot more of nearshoring.
Nearshoring. A lot of these things are like a pendulum, right? Globalization, they were trying to maximize it. It went to the nth degree, and then it shot back and it went to the minus nth degree. And of course, it's going to become an optimization exercise. So, and rationality is going to win in the end. So Zeynep Özkasım says, thank you, Bulent Celebi and Didem Alta. Thank you for watching us, Zeynep'cim. Question for Bulent, any tips on how to get some US-based leads for alpha tests? LinkedIn ads, Google ads, being active in LinkedIn groups. And Aydin Çelebi made a surprise appearance, +1 to Zeynep's question, but maybe pivoted to focus on how do you go about customer discovery? How does one search, identify, and close that first co-design partner?
I mean, there are so many.
Aydin happens to be Bulent Bey's son. Nice to see you there too.
Yeah, I mean, there are so many great ways to do that. I mean, it's the U.S. is very easy to get initial customers and things like that, ranging from crowdfunding to LinkedIn to do you know anybody at some university that you went to? I mean, and the good news is people like doing that type of thing. It's not, they enjoy it. So it's, you can definitely, get some initial customers and initial, alpha users that want to try something out.
That power dynamic is fascinating, actually, with the American culture. Like I find maybe in Turkey and in Europe and even in the Middle East that keeping information makes you powerful. But in the United States, sharing information makes you powerful.
Yes.
And it really builds your reputation. So maybe that's why they're so willing to make those introductions. Like they do enjoy it, but it's also a way to gain respect. It's so fascinating that they do that. I do believe we're running into the hour of our time, but I'm going to take this one last question from Gökhan Güneri. I would like to know your view. What are the top 3 VC hot topics today for you other than AI? Good one. I mean, I don't even know that AI is a hot topic anymore. I feel like AI is kind of a utility. It's in everything. So I don't know that you can really do anything without having an AI component at this point.
Yeah, I mean, I agree with you. AI, big data. I mean, data is still one of the big moats, if you will, that can actually differentiate you from your competitors. You have access to the right data, or how can you put that and organize that? And I'm still a big believer in any form of deep tech. I like investing in companies that actually have some idea of, some sort of technical differentiation. If it's just pure marketing, I tend to stay away from it. Yeah. But that's my personal thing.
I mean, there are always the industries that matter, right? So environment, so clean tech, climate tech, those things. Finance, obviously, and inclusivity on the other end of finance is always going to be important. Health tech, always going to be important. Education, always going to be important. So all those things, like the industries that matter, are always going to be key. But what I seem to find, again, together with my colleagues, is that we're seeing a lot more of the tech world coming together with the science world, and they're joining forces. And I'm seeing this more than ever before, and I've been doing this for 20 years, right? More than ever before, you have these people who weren't necessarily networking or talking to each other. Now they're coming together.
Agreed.
Really incredible value creation is happening with that synergy. So when you add the business element to it too, so you have the tech person, the subject matter expert, and then the business component to it, really powerful stuff. And I think that the top 3 things for VC are going to be looking for those co-founders that are coming together.
Totally agree.
My take on it. Wonderful. So I think that's it for our time, Bulent. I'm so excited that we had this chance to talk because I've had the opportunity to pick your brain for many, many years, and I really wanted to share it with our audience as well. Thank you to my teammates in the background, Chidam Toraman and Arzu Tekir, and thank you for everybody who came out to watch us and shared your
Yes.
questions with us as well. We look forward to doing more of these Trio VC Insights roughly every 2 weeks or so. We'll keep you posted, but this was a great start. Thank you, Bulent, for being our first, as always.
Thank you. It was wonderful. Great experience.
My pleasure. Thank you.